This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleague Sonia Mangalam is here with us on the show. Guys, hi, morning.
Hi, good morning. How are we feeling today? There's just about 3% away from all-time highs on the index. So the bulls must be feeling good. But how are we guys feeling?
I mean, we're feeling good. We always feel good, Sonia.
I'm feeling even better today because yesterday I saw the game Mumbai Indians versus Royal Challengers Bengaluru. And the way Sky batted Surya Kumar Yadav, it just reminded me of the way Indian markets are right now. Mainly because for Surya Kumar Yadav, everyone says sky is the limit. For us, 3% away from all-time high. Mumbai Indians third on the league table. After we improve a little more, sky is the limit, perhaps.
Okay. Well, I think for the bulls, there is no limit, right? That's how it seems. But a couple of things working in their favor.
You know, there are a lot of things working in their favor, but I think we may have to wait a little bit till you get to the 3%, at least today, or maybe this week, because there are too many catalysts around the corner. You know, so there are two important catalysts if you really want to drill it down, at least for today, right? One is local and the other is global. And that's the reason why I'm saying that it perhaps yesterday, for example, it was a flat day. Could today be something similar? We'll see. So the Karnataka elections, the state of Karnataka votes. If you're a voter, if you're watching us from Karnataka, do go out and vote. The voting is today. And then you have the exit polls which come out in the evening starting 5 p.m. So that's the first one, which is the local queue. The bigger global queue in that sense, of course, is the US CPI data, which will come out around US market timing. And that will be the big mover for markets around the world. And both are important, right? I mean, Karnataka state elections kicks off this political cycle which culminates into the elections in 2024. There are many more state elections, but this is a big one. And out there, in terms of the CPI, the market is pricing in aggressive rate cuts in the second half of this year. If after the very strong labor market data, the CPI data also comes in very hot, I mean, the market may price out rate cuts, price in rate hikes or very high rates till the end of the year. So both are, in that sense, important. Now, the Nifty yesterday gave up gains and ended absolutely flat. All right, we were up about 65 points at one stage, and by close, there was nothing on the table. So the levels don't change very much. I mean, the moving averages change a little bit. On the way up, 18,450 is still the level to watch out for. It is a 78.6% retracement of the entire fall that we saw from the all-time high of 18,887. And on the way down, Friday's low, I mean, the Friday was a washout session. Monday was a full recovery after that. But Friday's low was 18,055, and that should not be violated if we do start to move a little lower. There is a bit of an intermarket divergence developing between the Nifty and the Bank Nifty. The Nifty has made a higher high. When I say higher high, I mean it's taken out the high from last week. So it's a higher high, while the Bank Nifty has not done that yet. So we'll see if, there is more to go on in this divergence. On the way up for the Bank Nifty, last Thursday's high was 43,740. That's the first one. And then 44,385 comes into the picture. So these are very near-term resistance levels to take out. On the downside, the low of 42,542 should not be violated if the market starts to test, levels a little bit on the lower side. Now, the point is, these are all levels which you should keep in mind in the framework if you're trying to trade the market. And, at extremes, it's a good idea to get in. But the fact is, there is a fair bit into the mix today. I mean, over the next 24 hours or so. So to my mind, I think to stay clear perhaps is the best strategy, at least for today's session. The SGX is indicating a 35, 40-odd point start, but expect a fair bit of volatility as the day progresses with both those catalysts playing on the minds of the market. I suspect some of the climb down that we saw even yesterday perhaps was with regards to going into this state election in Karnataka in a lighter kind of fashion, and the same may play out today as well. Sonia.
Absolutely, and I think, overall the sentiment is bullish, right? We track it minute by minute, so we don't, I mean, if you look at it from a bird's eye view, this market is trending upwards, so it's prudent perhaps to stay bullish on this market. Remember, we are consolidating around that 18,250, 18,300 mark, but in essence, we're just 3% away from those all-time highs of 18,887. So in that context, the higher highs that Prashant was talking about, that perhaps is something that could continue. The flows are also very, very strong. So it's been what? I think 9 straight trading sessions that FIs have bought in the cash markets. Yesterday as well, FIs bought about almost 2,000 crores, and put together, it's, over 5,000 crores of buying that we've seen in 9 trading sessions, or rather in May already. Also, the corporate earnings have been pretty strong. So you've had, overnight, you've had names like Lupin, Apollo Tyres, a lot of cement companies that have reported numbers, and strong growth through and through. So for Lupin, 14% revenue growth. The US margins have improved, which is important because pricing pressure was the issue there. For Apollo Tyres, the entire tire manufacturing space has done really well because of lower raw material costs, better top line, etc. Now, as Prashant was also pointing out, today the crucial data is the US inflation number, and that's important because it will offer some insights into what the Fed could do going forward and whether their rate hikes are working to ease sticky prices or not. So that's something that the market will look forward to. And in the US, it was a bit under pressure, but it was also because of earnings. So a lot of earnings came out, Airbnb, Twilio. Stocks were under a lot of pressure after the forecasts were weak. But I guess, the bulls have latched on to this market, have tightened their grip a bit. Yesterday was a bit of consolidation, but maybe just catching its breath before making the next move upwards.
Absolutely. The interesting thing is that we're currently in cruise control. Yeah. And while you're in cruise control, there could be some turbulence here and there. I mean, that's reflected in the kind of moves that we have this morning as well. Overnight, Wall Street was weak. We have most of the Asian indices trading in the red, but the SGX Nifty is in the green. Yesterday's last hour decline could totally be explained by the decline that we're seeing in Fin Nifty. So it was the Fin Nifty expiry that led to a decline in the last hour. We saw active calls at 19,400 and 19,450 telling you that there could be some resistance around 19,425, and that's exactly was the high of the day. And as a result of which, the biggest weight on the Fin Nifty are HDFC Twins. The biggest weight on the Nifty are HDFC Twins. The biggest weight on the Nifty Bank is HDFC Bank. So we saw a decline, a secular decline across all the indices. No problems with regard to the cash flows. I mean, FIs and DIs buying together, the net institutional flows for the last couple of trading sessions have been around that 2,350 odd crore mark. So, that's no problem. So what is it that explains the decline that we saw? It's the Nifty financials expiry and some short positions being added in index futures. The FIs have added around 5,700 short positions, and as a result of which their long exposure has dropped mildly to 48% as against 49% in the previous trading session. The congestion between 18,350 to 18,400 is explained by the call writing. Call writers are active at 18,350 and 18,400, both of them having a premium anywhere between 20 to 30 odd rupees, telling you again there is congestion out there. But put writers haven't given up hope. 18,300 put writers are still active, and there is a premium of 70 rupees available there, telling you 18,200 to 220 is a bit of a support. And that's really, the point that bulls should latch on to. The Nifty support has moved higher from 18,000 to 18,100 to now 18,200. So as the base moves higher, we perhaps clear the way out for some sort of an up move as well. Congestion between 18,350 to 18,400, if we go ahead and cross that, would be a big thing to watch out for. Most importantly, the reason why we have congestion is because Nifty Bank is facing supply near record high levels. Now it's just 2.2% away from record high. Yesterday at one point it was less than 1.5% away from a fresh high. The index to watch out for today will be the mid-cap index, mainly because it is weekly options expiry on the mid-cap index today.
Well, Mangalam, the other thing is earnings, right? I mean, 5 days back, earnings, generally the overall picture was looking good, but over the last 3 or 4 days, we've had so many misses, disappointments, especially on, for example, we'll speak with the management of MGL today. Earnings look good, but volumes are very subdued, and that seems to be a trend across companies. So we'll do the full picture once all the earnings come through, but the view there also is getting a little subdued, that like the third quarter, which saw multiple downgrades after the earnings season ended, will we see something similar this time around? It
depends on where you're looking, because all of last year, a lot of the earnings that came by was on account of pricing-led growth and the margins compressed. And this year, it's the other way around, because pricing growth will come down, volume growth at some point will perhaps pick up, and margins will expand.
At some point, Mangal, that's the question. At some point.
I think in that context, L&T's numbers are important, right?
Yeah,
They come out later in the
late
evening.
in the evening, yeah.
And the expectation is that not only will the numbers be good, but the company may surpass its FY23 guidance as well. So that'll be a big trigger for the market tomorrow.
Absolutely. Well, that's in the evening later today by about 6 or so, I think. Well, we'll go on and tell you what's lined up here in the first 30 minutes of the show. We'll get you updates from markets around the globe. Rana Gupta is our guest of the program. He's, of course, with Manulife Investments. We'll have our research team bring you the top 10 stocks to watch out for, as always. And we do a fundamental stock analysis with Deven Choksi. Lots of stocks that Deven wants to comment on, and we want to put his way.
Okay, so let's begin the show then. We have a lot of opinion coming through. Are we all set to hit new highs, or will it take some time? On the equity side, Sanjeev Prasad of Kotak says that the market has lapped up the recent improvement in India's macros, peaking interest rates and better external position. He hopes that the improved macro percolates into better micros over the next few months. He says Q4 FY23 results and management commentary underscored subdued domestic demand and consumption and weak global demand in the outsourcing sectors. He expects a gradual recovery in domestic consumption over the next 2 to 4 quarters. He also adds that valuation is at risk without a quick recovery.
Okay, well, let's get you some money market views now. Kunal Sudani of Shin & Bank says US dollar held ground as market participants refrained from taking large positions ahead of the highly anticipated US April inflation data. He says the ongoing debt ceiling impasse is weighing on the market sentiment. He says dollar index continues to hold at 100.8 levels, and some demand from oil companies was seen pushing the USD INR pair higher. For that pair, Kunal says 81.8 to a dollar acts as a support, while 82.35 to a dollar is a resistance.
And on the bonds, Neeraj Gambhir of Axis Bank says the 10-year benchmark bond rallied and traded in a range of 6.97 to 7.14%. He says bonds rallied on the back of firm auction demand and favourable global cues. He says the SDL auction also saw decent demand, with the 10-year SDL cut off at 7.44 to 7.45%. Neeraj says the US 10-year Treasury yield made a low of 3.3 after a dovish FOMC, but trended higher thereafter on strong non-farm payroll numbers. He expects 10-year benchmark bond yield to trade in a range of 6.95 to 7.1%.
Right then, let's get stock-specific. We do have a lot of stock-specific action to track, and we'll get to that in just a bit in our special top 10 segment. But let's look at the stocks that we're looking at. Polo Tyres, Lupin, Birla Corp, Nuvoco Vistas Corporation, Eveready Industries, and Nazara Tech on the back of positive news flow. Fats and Agro, we have Castrol and Rain Industries along with Latent View Analytics, our stocks on our radar, which are likely to open in the red.